If you own a small business, you might have asked yourself before, how do I actually pay myself? Do I just move money from my business account to my personal account? Do I need to be on payroll? And what about taxes? Today, I'm breaking down exactly how this works, whether you're an LLC, sole proprietor, or S Corp. And I'm going to show you how you can record this in QuickBooks and Wave so that you stay compliant and you don't mess up your books. Hey there. If we haven't met before, my name is Andrew Bloom and I'm owner of Profit Logic, my accounting firm. I help solopreneurs and online business owners simplify their bookkeeping and their accounting systems so that they can focus on doing what they do best. I'm also a PhD student in business with a concentration in accounting. If you want clear, no fluff, simple to digest bookkeeping and accounting tips that actually make sense, be sure to hit that subscribe button so you never miss a video. All right, let's get into it. So, like most business owners, a lot of people start by focusing on sales and marketing. Early on in their endeavor, they might not be spending much, so it's easy to kind of just let the bank statement, the credit cards track what the business is spending and how much it's making. But eventually, these business owners hit a point where things start to grow. Money's coming in, money's going out pretty fast, and all of a sudden, the numbers are getting chaotic. They're not really sure what money is theirs to keep. You might think that this kind of money confusion happens only to small businesses, but it actually can happen to big creators too. For instance, take the UK YouTuber Hannah Witten. Back in the earlier 2000s, she made a successful career as a content creator, talking about sex and relationships for over a decade. But after having a baby, she scaled up her team and ended up paying her team and her business expenses and herself only from savings and even her own bank account just to keep the wheels turning. Eventually, it all became unsustainable. She was working harder than ever before, attracting even more viewers and subscribers, and yet finding herself financially and emotionally stretched thin. And ultimately, she decided to quit the whole business altogether in order to protect her well-being and her sanity. So being on top of your accounting as a business owner is crucial for survival. And it's so much easier to get started from the get-go than trying to figure it all out when you are finally making money. So it's important to note that how you pay yourself depends immensely on how your business is legally structured. And if you get this wrong, you either might pay too much in taxes, not enough in taxes at the right time, or just end up with messy books that make tax time pain in the butt anyways. So first, we're going to talk about what is legal and normal for your current business structure. Then I'm going to give you 2 methods you can use to decide how to pay yourself. And finally, I'll show you how your personal income is tracked in QuickBooks and Wave over the long run. All right, so let's start with the basics. If you are a S corporation owner, you must pay yourself a reasonable salary, and this is done through payroll. That means you withhold income taxes like Medicare and Social Security tax, just like any other employee. You can also take additional money out of your business through what's known as a shareholder distribution. And this information should be tracked in your bookkeeping software using an additional service such as QuickBooks Payroll or Wave Payroll, or through an outside third-party payroll manager like Gusto. So that's S Corp owners. For the majority of you watching, you're going to likely be a sole proprietor or LLC. In this case, you are not on payroll. The owner of an LLC or sole proprietor does not get a salary. Instead, you pay yourself through what's known as an owner's draw. That means you're simply transferring money from your business account to your personal account, and no tax is withheld at the moment. Instead, you're going to pay taxes on your own later through estimated tax payments. Now, here's a key thing to know from a bookkeeping perspective. The owner draw does not show up on your monthly profit and loss statement. Instead, they show up in the equity section of the balance sheet. And you might be wondering why that is. And it's basically because you're just moving money from one part of the business to another, like your bank account to the owner. Nothing was earned or spent in the process. So now that you know the basics of how small business owners should pay themselves, the next big question might be, how much do you pay yourself? And to answer this, there's really no one-size-fits-all number. Instead, I'm going to walk you through two proven methods that make this decision way easier to settle. And they're both used to help keep your business healthy as well. So if you want a predictable system, try the Profit First method as outlined in Mike Michalowicz's book, Profit First, an easy to read book that's often recommended by other business owners. I highly, highly recommend reading this book if you own a small business and you're just getting started, or you want to finally build a system for your finances. But the concept is simple. Every time money comes in, you split it into 4 separate accounts. They are profit, taxes, owner's pay, and operating expenses. And how much money goes into each is predetermined by some kind of allocation percentage you set from the get-go. So for example, you might decide that 40% goes to owner's pay. So if $5,000 come in, you immediately transfer $2,000 into the owner's pay account. And either on a biweekly or monthly basis, you take that money out of the account and pay yourself to your own personal account. Mike also recommends setting aside at least 18% for taxes. And profit is its own account that's separate, and you can withdraw money from that either on a quarterly or a yearly basis. And that's different from owner's pay, because owner's pay is kind of trying to take the place of a salary, but profit could be a much larger amount you claim as your reward, if you will, from the end of the year after a profitable year. Operating expenses are pretty straightforward. How much you allocate to that depends on your industry and how much you depend on cash to pay for services and bills in order to operate your business. So this system is pretty simple. It forces you to save for taxes, it makes you pay yourself, it sets aside some money for profit, and it ensures that your operating expenses are paid for as well. But the real benefit of using this system is that it grows with your business. Or rather, it is growing and shrinking depending on how your business is doing month to month. It basically helps ensure that you're not overpaying yourself or underpaying yourself as your business grows or faces contraction. So that was Profit First. But another method is to set a monthly goal or monthly target for how much you pay yourself. And you can adjust it based on performance on a quarterly basis or annual basis, for instance. With the goal-based method, instead of paying yourself as a percentage of your business's income, you set a target that you expect to pay yourself. So a baseline like $3,000, and that is the amount you pay yourself each month. I think this system works best if you already know how much you're making in your business, you've been around for a little while, and you have a good idea of what the cash flow is like from month to month. It's also helpful with this method to have some kind of cash buffer, a little bit of savings in your business already. And one way to go about this method is that you can look at your profit and loss at the end of each month, see how much your net income is, and as long as that hits or exceeds the amount you're expecting to pay yourself, then you can pay yourself your goal amount and put the rest of the funds back into your business. And that way, you'll have some savings that will continue to grow that you can use to continue to pay yourself during slower months. So it's a little less structured than the Profit First method, but it at least creates a rhythm and some expectancy so that you know exactly what you'll be making from month to month, while leaving extra funds left over for your operating expenses and taxes. Okay, so first in QuickBooks, we're going to go over how you're going to categorize a owner's draw. This is speaking to the LLC, the sole proprietor, who is just taking a draw, not a salary. So if you're an LLC or sole proprietor, when you go to your QuickBooks, you're going to go into your bank feed, which you can do through My Apps, accounting, bank transactions. I highly recommend bookmarking this because it's probably the most used page in QuickBooks. So go ahead, go to bank transactions, and this is just a sample company. Basically, whenever you're paying yourself, it'll show as spent. Let's say this is your bank account for your business. You'll see a transaction that when you send money from your business's bank account to your personal account, it'll show up in this bank feed. And for that, you're going to categorize it as an owner's draw, or owner's draw here as an equity account. And you should have this account in your QuickBooks as part of your chart of accounts. So you'll select that. And if you're a partnership, it might be something like a partner draw or a shareholder draw. And I recommend if you are a partnership, make sure each of you have your own owner draws account so you can keep track of who has taken what. And that is basically how you record paying yourself in QuickBooks. And you'll post it. And then later, when you go to your reports and you go to your balance sheet, you'll see in equity that there's a line for owner draws. And here you can see 846, that amount that we categorized was taken out. This is also useful. So let's say you accidentally purchase something for yourself using your business's bank account, which I highly recommend do not do. Keep them separate. But let's say you accidentally did, or you were just short on cash in the minute. You would take that transaction and similarly, let's say this was your personal Amazon account that you purchased something for yourself. Instead of treating it like an expense for the business, again, that would also be an owner's draw. So in Wave, it's pretty similar. You're going to go down to your accounting section and click on transactions. And in your bank feed there, whenever you see a withdrawal to your own personal banking account from your business banking account, so this one, for instance, you'll click on it and you'll look for the same category. It'll be owner's investment drawings. And the reason why both are combined in the same account is that when money's coming in, it's obviously an investment. When it's going out, it's obviously a drawing from that categorical account, the owner investment drawings. So when you pay yourself, that's how it's categorized in your books in Wave. And the same thing when you go to reports, you'll see it as equity under the balance sheet. Okay, so that's how you track paying yourself in QuickBooks and Wave. Now, let's take a moment to zoom out and tie everything together so you can walk away knowing which method works best for you and how to start paying yourself confidently. So here's the big takeaway. If you're an S Corp, pay yourself a reasonable salary through your payroll. And if you're a sole proprietor or LLC, you're going to be paying yourself through owner's draw. It is best to use a system. Be sure to use profit first. If you want to set a percentage that grows and contracts with your business's income, or use goal-based pay if you want a predictable income with flexibility for other business expenses. But the most important thing from this video is to be sure to pay yourself. Too many business owners go months without paying themselves, and then they wonder later on why they feel burnt out, why they are emotionally stressed, and feel undervalued in their work. Remind yourself that you do deserve to be paid for the work you do in your business. If you found this video helpful, be sure to give it a thumbs up. And also, if you are a small business owner who wants help with their bookkeeping, creating an accounting system, or just figuring out how to set up your QuickBooks or your Wave account, be sure to check the link to the Profit Logic homepage in the description box below. And there you can find my email. You can schedule a time if you want to talk about how I can help you build a better accounting system for your business. Your business should work for you, not the other way around. I'll see you all in the next video.